warm welcome to everybody. I am Shija Agrawal.
A name recently dominating the news is Hindenburg Research, which took on one of the world's richest people, Gautam Adani, and accused his company, the Adani Group, of a brazen stock manipulation and accounting fraud scheme. Hindenburg cited 2 years of research, talked with former employees, and reviewed thousands of documents. Though the Adani Group has blasted Hindenburg, rebutting that this is selective misinformation and baseless allegations, Adani's firms have lost about $110 billion in value, and his wealth has been halved to about $60 billion as of February 2023. And what is Hindenburg's objective? They get to make money having taken a short position in Adani Group companies through bonds traded in the US and other instruments traded outside India. So with this in mind, is short selling an astute and surefire way to deal with market malfeasance while also having a vested interest in the downfall of a company's stock? And befitting the name Hindenburg, is this where the humanity of the rise and fall of companies lies? To help me explore this in detail, please help me welcome Vijayanand Venkataraman, CFA.
Thank you for talking to us. I understand that you become a star in your Twitter thread by giving some radical thoughts on short selling. I think in this interview, I just want to sort of make sure that this is not necessarily about the doings or the wrongdoings of one company, the alleged wrongdoings. I think what we're trying to understand really is the mechanics of short selling, what's really the motivations, because the commentary after this entire short selling really has been that there could be more motivations by other research firms to actually short on a country. Are we really shorting on India? The larger question really becomes that can you short on a country really? I'm looking forward to a very interesting discussion with you. Let's begin with really trying to understand that how should one really approach short selling as a trading strategy and determine the potential risks and rewards that come with short selling a stock? What really are the motivations of a short seller, and does the psychology really vary from a regular investor?
Hi, thank you, Shrija. Thanks for having me today. It's my pleasure to talk to you. Short seller is no different from a regular investor, right? So most investors, every investor out there is to generate returns. So most investors, they buy, hold, sell. Short seller is somebody who kind of, takes the reverse view. So, when we look at it, we always have a bull versus bear battle, right? So every stock, every company, every country has its own, people who like it and who don't. Now, so there are multiple ways a short seller does, multiple levels at which they operate, right? So some typically take a sector call, or a cyclical call on a large cyclical industry, right? So they may take a view on, say housing or something like that. So we have seen this in the US. So go back to 2006, 7, 8, we have seen Michael Burry. Michael Burry is a physician by training who thought housing was overvalued or whatever, and he took a short view on housing. And same thing was Paulson and Co. And that is one side where they take a exposure or a view on a sector. And there are others who run, they kind of like some of these long short equity hedge funds or long short bond funds, right? So they take a view on one bond versus another bond. And these are all more short-term trades. The short is not, like people say, short is not for a very long period. Right? And then we also do people who look to hedge their portfolio. So they also, so how do you hedge? You have to hedge, you have to short something. And then comes this category of activist short sellers, right? Like where Hindenburg money, and then you have Muddy Waters and everybody else. So their view is, they take activist view, they look for vulnerabilities in companies, and then they try to, they take a position, and then they publish a report to kind of make that position work for them. Right now, the thing is, while the first three, the one who is taking a valuation call, or one who is taking a cycle call, or one who is trying to hedge or do that, they keep the markets in a very fair zone. See, market cannot, when markets are overvalued, when stocks are overvalued, it kind of a self-correcting mechanism. Whereas the activist short seller, his motivation is could be anything, right? But have they always won? Well, it's not very clear.
Okay, so you're saying that there are these vested interests and their motivations for the short sellers to sort of do it. So what really should India's stand really be on this? I mean, should we really go the China way or the US way, where China sort of really puts a blanket ban on short selling and says that I'm not sort of entertaining any of those motivations? Or you go the US way, where you say that your regulatory standards are so stringent that you tend to sort of then go on a hunting drive on the company on which sort of these kind of reports sort of come by. So what really is the viewpoint here? What should India's stand really be? Because this has really ballooned into something very, very big now.
See, banning anything is not a real solution, right? In the sense, see, we are an open economy. So if you go back in our own history, we have had Badla as a short selling system in the past, right? For long periods of time. And we have had legendary battles there out there. So that's one. Second thing is, it's not the short sellers win. See, George Soros took a view on pound, he won. He took a view on Hong Kong dollar, he didn't win there, right? So the thing is, regulations are the crux of it. If the regulations are tight enough, see, you create a playing field, you create the rules, and the players have to stick to the rules. So our regulations are actually quite robust when it comes to this, because we have been very progressive in our regulations, to be honest. So we moved from Badla to a futures. I mean, we introduced futures. In fact, India is the only market where single stock futures trade at volume. You don't see it in any other market globally. So we have a mechanism, and it's a mechanism which has been there for, like, futures were introduced sometime in 2000 or so, right? So it's been there for 2 decades now. So it's just, see, the way Hindenburg has done it is, they have not used any of the instrument listed in India. So his jurisdiction is very different. So he has used instruments which are listed in the US, and he says offshore derivatives outside India, right? So so our regulator actually doesn't have any jurisdiction on it. One thing we need to realize, it's not just Indians, right? Asians in general, we are little emotional. Right. So for example, right, when Paulson and Co. or when Michael Burry shorted US housing, right, one could have taken a stand that, they are shorting the American dream. The American dream is, some immigrant comes in, buys a home, settles there, lives a nice life. But no, I don't think there was anything of that sort, any kind of comment made on them. Right. So it's somewhere like we need to, that's a cultural difference. So where, America is capitalist, and we are getting there. So it's an evolution in any country's psyche as well, right? It's not like we are not going to be there on the day one, but over a period of time, we will decouple our cultural thinking for capitalism to work for us. So at some point we will get there.
So you mentioned this interesting thing about capitalism, but isn't the golden rule of capitalism really be to sort of weed out the companies which can't really stand for themselves, are not strong and resilient enough, right? So what really becomes the outcome for this? And I ask you this question because it's very important for also a lot of new economy companies getting listed in Indian bourses right now. I mean, we are seeing this report ballooning into something so catastrophic for a company to supposedly resilient, supposedly very large, very big to even touch. What does it really mean for nimble-footed or perhaps supposedly fragile, more technology stocks coming on Indian bourses?
See, let's go back to the cases where short selling has worked well. In many of those cases, short selling has worked well when the companies are weak, right? But so essentially, it's capitalism is survival of the fittest, and it works both ways, right? We've seen LBOs, right? LBOs are also where a capitalist comes in, takes a stake, it dismantles the company, lays off employees. So it does create a certain effect. Now, capitalism has both. If you are good, it is good to you. So it will eventually, over a period of time, it will ensure, it will ensure that the stronger ones survive. Now, some of these new age companies, they should remain private, right? Because it's easy. It's easy to work through your issues when you are private, right? Because you have a lot of these all companies, right? All startups have issues in terms of, most of them are first generation entrepreneurs. They're still trying to figure out multiple things. So many of these companies will actually do well to remain public, work with their investors before they can see the scrutiny of public markets is very strong. The public versus, it's an argument in itself, right?
Yeah, that's what my real point is, because what really is happening with Adani, I mean, that is like, if you just keep that equation outside for a minute and really talk about the implications for other kind of companies and other such as supposedly technology, fragile companies coming on Indian stock markets, I think this episode has proven to be a warning signal for all of them and has actually set the alarm bells ringing. And this should be taken really seriously for new age internet stocks. Now, really talking about how this report really ballooned out of proportion, became so big. And I think the biggest takeaway for me really has been that there could be increased motivations for others to actually say and take a bet against India. In fact, this entire argument and hashtag and slogan of shorting India, do you really think this has happened in the past? What really is the ethics and motivation? Can you really short a country? In short, I'm asking that, really.
See, shorting a country is a lot to do probably with politics, right? So, for example, let's take the example of George Soros. Soros did short pound, right? Soros did short Hong Kong dollar in the past, right? But he didn't win every time. He won against pound. He didn't win against Hong Kong dollar. So, currency is one way to short. But see, ours is a closed currency, right? Ours is a currency where it's not a currency which is freely convertible. So you have to find instruments. So you have to find weak links. You have to find instruments, and it is not very difficult to take that view and express it as well. See, ETFs trade in the US, right? You could short ETFs. So India focused ETFs do trade in the US. So it is not very difficult to short them. So again, every country has its own cycles, right? So it's not that, and capitalist is going to make, so let's say India goes out of favor at some point. India did go out of favor 10 years ago, right? So we had a lot of money flow till 2008, 9, 10, and then it just stopped. So if we go, maybe there was somebody who would have taken, but he might not have come out in public. People could have shot. It's just that we don't know, because they don't talk about it much, like the way an activist short seller talks. So it's not like, again, it's not like, short selling is not necessarily bad. See, think about it. Like, if I know that there are vulnerabilities, what would I do? I mean, strengthen those parts, like a typical, a scientist or an engineer who will strengthen the vulnerable parts in his own design. So if there are issues, if there are vulnerabilities in an enterprise or in the markets, I don't think our markets have vulnerabilities, honestly, but every entrepreneur should look into his enterprise.
Exactly. I think this really has a warning signal for most of them, that if you really have vulnerabilities, you've got to be doubly sure of really putting yourself out in public scrutiny of investors. And the entire Adani episode and the short selling is ballooned to be really about shorting in the country should have lessons for promoters and especially new age entrepreneurs. My question we're talking to you about, this entire Hindenburg report has actually led to a very large public outing being shelved. Then I'm talking really about the FPO being called off. Do you really think, just really talking from an organization's perspective, do you think it was a correct move to do, or were the market reactions became just so unfavorable that you had nothing else, but you had to resort to something like this?
See, two things, right? See, very clearly, so Adani had to increase his free float, right, to meet with the regulations. Now, anything else, say rights issue would not have served that purpose. But at the same time, we have not seen a large FPO, or I don't remember seeing an FPO of partly paid shares. See, partly paid share is not the same as fully paid shares. Right? It comes at a price, it comes at a discount. See, look at the successful ones, right? There have been successful partly paid issuances, but they went through the rights route. So what Adani could have done is do it through a rights route, where allow the entitlements to trade in the markets and kind of get investors would be interested in the company to buy those entitlement and subscribe to those rights. So to get, see, looking at the scale, the size of this issue, right? And then the retail had to be, retail was significant, 30% of the issue size. So to get 6,000 crore demand from retail investors is not very easy. So and that being the case, probably that's what Hindenburg figured out. I mean, like, because for Hindenburg's thesis to work, capital raise worked well, the thesis was not going to happen, right? Because they need to say somewhere that the thesis is, the capital raise isn't happening. So the company still remains.
Yeah.
Right. So maybe this.
Yeah. So from the looks of it, do you think, Vijay, that Hindenburg has really won in this battle against Adani? Can we sort of safely conclude that?
See, it's unfolding. I mean, I wouldn't think they have won yet, but they have definitely like what you said, they have definitely raised a lot of issues with everybody else.
Yeah, they definitely have set the alarm bells ringing and
yes.
Sort of really opened the Pandora's box on various issues, I would say. And the first, which really garners my attention, is this entire narrative about crony capitalism. I mean, really, we're talking about from a distance, a lot of these organizations can really look similar. The nexus between politics and the corporations has always been questionable, especially when you talk about China, India, or Asia in particular. I want to understand from you that you think that episodes like this will have a ripple effect and can tend to become much stronger than just short selling as a phenomenon.
See, there are a couple of things, right? So this is a crisis, and typically India has never let a crisis or a semblance or even a semblance of one go waste, right? So we have always reformed. We have always reformed for a much stronger, setup, right? So there would be much more reforms, I would think. So and second, see, you have to protect. I mean, like, you have to protect as in, like, a company has to protect as well. They need to figure out their vulnerabilities and protect. And regulators would also figure out a few things.
I just want to understand from you really about the implications on what really this could have for the government at large.
See, I mean, government has done what it has to do, right? So we are an economy moving towards embracing capitalism. So government just stayed away, right? And that's the best thing that they could have done. See, it's between the short seller and the company to sort it out, right? And the regulators also did fantastic. They just said the system is strong. There is no systemic issues, which is true, because see, the banking sector, banking books are very strong compared to what it was a few years ago. So we are just the cusp of coming back into a new credit cycle. So when the credit cycle is about to take off, and that at this point there are not going to be any systemic issues. Systemic issues typically happen when the credit cycle ends, not at the beginning of a cycle, right? And the thing is, that being the case, our lending has not. We don't have that in the today. So government did what it has to do. Regulator did what they had to do. I think so. That's what I think. We're also demonstrating that we know how to handle this, right? So if say, for example, let's say if somebody has gone against the short seller, right? Either the government or the regulator, that would have sent a very wrong signal. So it is between the short seller, who is also a stakeholder in this, right? So, and for all he may end up losing money. Okay, right?
So I think my question sort of really becomes that, suppose if this were to happen to an internet company, you think, how would the narrative or the conversation have been? It would have been a very different narrative, a very different conversation.
See,
and
if it had been, let's say it's an asset-light company, I will not use internet or something. Let's say an asset-light versus asset-heavy, right? Had it been an asset-light company, you don't know where valuations would emerge, right? When it is an asset-heavy industry, any company, at some point valuations emerge. Now you saw that even in this case, you saw real marquee investors have bought those bonds. I mean, we read reports that Seth Klarman's Bob Post or Oaktree, Howard Marks, is kind of looking at it now. So some very savvy value investors are looking at it. So value emerges in a asset heavy company, right? Whereas in an asset light company, you really don't know. And second thing is, if it is an asset light company, you don't know how the reaction of the consumers would be.
I think that's what the thing is, and I think we are very quick and easy to really disparage or to really say, "Oh, new age promoter, he knows nothing. There's no business model. He just took away my money. The VCs bankrolled it." So just see, this has happened with a very established name, and I must say, a name which was too big to fail and something which you couldn't even touch, honestly. This happened with that. And when you compare that to an asset light, which you call the nomenclature, or an internet company born after 2018, the ramifications would have been absolutely different. I don't think the support mechanism also would have been that stronger too. So I think these really have a lot of learning lessons for a lot of budding entrepreneurs. My last question to you, really, Vijay, which is very important sort of segment to sort of what we discussed today, that can India really afford to have a hashtag like shorting India spread like a contagion, especially when you have motivations to become a 5 trillion to 8 trillion economy by like what in the next 2 years? And do you really think that this is something which we can really afford as where we are? I mean, for God's sake, it is 2023 now, and India is rising, and all eyes are on India right now. We are the cynosure of all eyes, be it institutional investors who put locked in capital for about 7 years, private equity guys, or the guys who come in and go, the hot money guys. Yeah.
See, the long-term investors, right? These things don't affect them. See, they have seen it in the past. See, they look at the strength of the company, they look at the strength of the economy, the demographics, the policies, the stability of regimes, right? Before they commit capital. So for them, it's like a short seller doing something, this kind of, I mean, I don't think anybody would be in Twitter to even track those hashtags, right? So for them, it doesn't matter. They know that they invest on the inherent strength of an economy, or inherent strength of the businesses, right? So, and could we afford as a country? See, the thing is, when our aspirations are to reach where we want to reach, right? We are going to face challenges. We are going to face our markets will have very different participants. Now, this is kind of one example. It's the first example. So we are going to have very different set of. See, private equity was not there 10 years ago at scale, right? So what is the private equity that was raised prior to 2010 and post 2010? Because it's a new thing for us. Now, this is again, we should take it in our stride, as in like what I said. See, when it comes to, like I said, a short seller looks for vulnerabilities in a company. So, I mean, every entrepreneur, every enterprise should figure out how not to have vulnerabilities. Now, and somebody said, like, A is meeting regulations and B is going beyond those regulations when it comes to governance. Now, the companies that survive or that thrive are the ones who go beyond regulations when it comes to governance per se.
Okay, so finally, the thing is that we will emerge stronger from this. We should take it in our stride. It's the first time something of this proportion has really happened to us. But having said that, it also has lessons for a lot of entrepreneurs on essentially that what you are building, build for long term, and what you are building really is solid. You should be able to defend it against all the challenges that come your way. Thank you so much, Vijay, for sort of spending your time and energy to this. Do you want to have any kind of last word or any kind of last sentence to sum up this conversation? What would that really be?
Capitalism works both ways. So if you want to get where we want to get, we should be ready to face those challenges.
Thank you so much, Vijay. And I really appreciate you joining us in the Market Hours today. Thank you. And I wish you all the best for your future endeavors. Thank you.
Thank you. Thanks, Shrija.